Markets can work through a correctional process in two manners. One of those is to actually have a correction where the market actually sells off, 5, 10%, whatever it is. The other way to do it is to just work through a consolidation period. In other words, a period where the market just doesn't go anywhere, which is exactly what's been happening here really over the last 2-3 weeks. Here's what you need to know before the bell this morning. So the good news is that the market is holding above the 20-day moving average. So that's good news. And again, not surprising that the markets are trying to hold in here. We're starting to see, a little bit of the market starting to kind of stabilize here a little bit after kind of a rocky start. A lot of that, again, as we talked about, was tax gain selling for the year. We saw that a lot in the technology stocks. Those have actually been performing a lot better over the last couple of days. NVIDIA hit an all-time high, as an example, one of the big seven. Futures are down a little bit this morning. They're kind of flattish more than anything else. So again, just kind of this grind. And here's the thing that we talked about previously, and continues to kind of really work itself out. We stated back in mid-December that the market had gotten very elevated here in terms of the MACD signals. The market has gotten very overbought. We said at that point that upside was probably limited. But, markets can work through a correctional process in two manners. One of those is to actually have a correction where the market actually sells off, 5, 10%, whatever it is. The other way to do it is to just work through a consolidation period. In other words, a period where the market just doesn't go anywhere, which is exactly what's been happening here really over the last 2-3 weeks. The market just has made no progress. We've just been stuck here kind of in limbo, trading around a little bit back and forth. But that's good from the standpoint for two reasons. One, this kind of support does begin to work off this kind of overbought condition that we had. We're currently on a sell signal, which continues to suggest that we have limited upside at the moment because we're still working through this correction of this of that previously overbought period. So again, that's just going to take a little bit of time to work through that. But what this also allows, though, is it allows for shorter-term moving averages to catch up with the market. So that limits your downside risk. So again, if you're expecting a really big correction, the more time that we spend just trading sideways, the less it limits that downside draw that you've got to have to work off that overbought condition. So this is actually kind of bullish news from the standpoint that you have this rising 50-day moving average that's beginning to catch up with the market. So at some point here, if the market just keeps going sideways, the moving average will catch up to the markets, will work off this overbought condition. The market can then begin to form a base, and it is forming a base on which to launch a potentially another move higher. So again, that's kind of the bullish setup for the markets currently. Again, doesn't mean though that tomorrow that we couldn't have a sell-off back towards 4,500 either. So I mean, that 50-day moving average, and just below that's the 100-day at 4,450. Certainly doesn't mean the market can't have a correction here. So we certainly can. But my point is that the longer that we spend just kind of trading sideways here currently, that's going to ease that amount of potential downside risk that we've got going on. One other thing to take a quick look at is 10-year Treasury rates. Those have been creeping up here a bit. Now, we talked about 2 weeks ago that interest rates had gotten very, very overdone on that decline, and that we would expect to see a bit of a bounce in interest rates, and that's exactly what's happened. So we saw the market, interest rates kind of bottom here and then have bounced up temporarily. So we got back up to about 4%-ish. We're running right into that 200-day moving average. So that is currently right now kind of limiting that upside move in interest rates. So again, market, just like the financial markets, which are kind of consolidating that overbought condition, interest rates, because they're the inverse of bond prices, got very oversold. And so they're now working off that oversold for interest rates. It's overbought because it's upside down. But we're working through that same process. So again, consolidation in rates and the consolidation in market prices is allowing potentially for that next move, which would be potentially for stocks to move higher and interest rates to move back lower. So again, just be a little patient here, as we've talked about before. No big rush to go jump into the markets just yet. No big catalyst right now to move markets. We're about to start earnings season. That will be the next catalyst to move markets potentially higher, depending on how earnings come in. So just be careful here, but that's what you need to know before the bell this morning.